Have you ever pondered whether purchasing Tesla stock would enable you to retire early? The chance to retire early is too good to refuse, and many people think that Tesla makes it possible. See how to retire on Tesla stock by tuning in and continuing to watch. Some people said that no one can become wealthy doing an 8-to-5 job. Actually, the majority of CEOs of prosperous companies put in more than 10 hours a day at work. However, a regular office worker might not be able to live off of their monthly salary alone and retire early. You will learn how to live off of Tesla stock today. Most individuals would be thrilled to earn a sizable sum of money without having to work very hard, especially those who are hustling around simply to make a few cents. Even though it sounds improbable, making the correct kind of investment could enable you to achieve that. Darren Jung, a Tesla investor and YouTuber, has provided an analysis of the amount of Tesla stock required to fund retirement by 2030. According to him, 300 Tesla shares will likely be sufficient for him and many others to retire by 2030. Financial independence is the main reason why most of us begin investing, he said. He clarified that with just $5,000 every month, a basic retirement may be achievable, requiring about $2 million USD over the course of a 30-year retirement. According to Jung, there are several things to take into account that could have an impact on his plan. Inflation is one. He predicted that in 15 years, $5,000 will be equivalent in purchasing power to $10,000, assuming an annual inflation rate of 5%. He clarified that having many sources of income, such as carrying on with your Tesla stock investments and/or doing occasional paid work, could help mitigate this, even if every person is unique. $2 million should be sufficient to meet the needs of the majority of people. Naturally, keep in mind that different people will have different requirements and lifestyles, which will have an impact on the amount's growth or fall. Jung determined the 2030 value of the Tesla stock price by utilizing the bear and bull scenarios. In the unlikely event that Tesla only sells 10 million cars, the average selling price would be roughly $60,000, which is comparable to what it costs now. Elon Musk, the CEO of Tesla, anticipates that the company will sell 20 million cars by that time. According to him, there are a few variables that would offset Tesla's potential release of a few more cheap models priced around $30,000. The first is the eagerly anticipated Cybertruck price. The Cybertruck is expected to cost approximately $80,000, which is much more. Keep in mind that this is the worst-case situation. The current rate of inflation, which is 5% annually, is another element that affects the economy as a whole. Tesla and other businesses are predicted to have addressed most of the problems with autonomous driving by 2030. Note that FSD revenue is recognized by Tesla under automotive revenues. Assuming that Tesla's hardware sells for $40,000 by 2030, this suggests that at that time they might record $20,000 as FSD revenue, or $60,000 on average in a bear market. The automotive industry generates $600 billion in revenue when 10 million cars are sold for an average of $60,000 each. That is an additional $90 billion in revenue, assuming that. Tesla maintains its current 15% non-automotive revenue. Tesla is expected to generate $690 billion in revenue overall. That translates to a total net income of $104 billion, assuming that the net income remains unchanged. In order to compute earnings per share, one must divide the net income by the entire number of stocks that are accessible in the market. This works out to be approximately $104 billion of income divided by 1 billion stocks, or $104 per share. In order to get the share price, one must multiply the 104 profits per share by a price-earnings ratio. For the sake of calculation, Apple's P/E ratio of 30 is used. In a worst-case scenario, Tesla would be a well-established business with a $3,120,000 stock price by 2030. The base case scenario involves a few minor alterations to the presumptions. Musk plans to deliver 20 million cars by 2030, so even if annual auto sales rise from 10 million to 15 million, it still leaves him a little shy of his target. After that, net income rises from today's 1% to 20%. Tesla is increasing output at its factories in Austin and Berlin, but its revenue remains around 15%. When the fully operational gigafactories and increased software margin contribute more significantly to Tesla's sales, the company may see a rise in net income. Do you believe Tesla stock will allow you to retire? Post your ideas in the space provided for comments below. Assuming a base scenario where there are 15 million cars and each car sells for $60,000, the total automotive income comes to $900 billion. There would be an additional $135 billion in revenue if the 15% non-automotive revenue mix remains the same. Nevertheless, Tesla is expected to generate slightly more than $1 trillion in revenue overall. There is a net income of $207 billion at a net income of 20%. Hence, dividing $207 billion by 1 billion shares to get earnings per share equals 207. Nevertheless, in a basic situation, the share price would be $6,210 or earnings per share multiplied by PE or 207 multiplied by 30 PE. And lastly, the scenario of the bull. As with the bear and base scenarios, there will be a number of adjustments and suppositions made. Here, Tesla will meet Musk's targets by delivering 20 million cars annually. Additionally, Tesla plans to double its non-auto money revenue from 15 to 30%. Finally, Tesla's net income will rise to $25, the same amount as Apple's current net income. In the best case scenario, Tesla would sell 20 million cars at an average price of $60,000. This would result in $1.2 trillion in revenue from sales of automobiles. The extra $360 billion from a 30% non-automotive revenue would be significant. All told, Tesla is expected to make $1.55 trillion in revenue. 25 times net income is $390 billion in net income, which is comparable to Apple's current net income. $390 billion divided by 1 billion shares, or $390, is the earnings per share. Additionally, the 30 PE multiplied by the 290 Tesla share price results in an 11,700 share price in a bull market. Keep in mind that these are conservative estimates. Presently, Tesla's price-earnings ratio is at 100, surpassing the 30 PE utilized in the computation by more than 3 times. That being said, the share prices in all 3 scenarios would double if the PE ratio increased from 30 to 60. Conversely, all 3 scenarios share values would triple if the PE ratio increased from 30 to 90, which is still less than the current 100 PE ratios. Furthermore, Tesla's average selling price and margins still have space for growth. Now that all the calculations have been completed, let's determine the number of Tesla stocks required to reach the $2 million retirement target by 2030. In the unlikely event that the price of Tesla stock rises above $3,000, about 650 units are required. Approximately 300 stocks are required in the worst-case scenario where the price of a Tesla share exceeds $6,000. In the event that Tesla's stock price rises to over $12,000, about 150 stocks will be required. Once more, people's needs, desires, and lifestyles are different. As a result, various persons can need different retirement fund amounts. Tesla has undoubtedly established a name for itself in the market by this point, and judging by its success even after the decline, it looks like the EV manufacturer will keep growing. Because of this, Tesla might end up being a wise retirement option in the not-too-distant future. Many Tesla bulls aspire to retire wealthy as devoted Tesla shareholders because they support the company's vision of a cleaner, more ecologically friendly planet. A person would require at least $4,100 a month to live comfortably in a Western nation like the United States, as the median retirement income in the United States is approximately $47,000 according to annuity.org. Overall, the information provided suggests that investing in Tesla stock has the potential to make you wealthy and eventually enable you to retire sooner rather than later. However, nothing is certain because there are economic variables that could cause the company's stock price to increase or decrease. The good news is that your money will last for a very long time because Tesla shares will increase in value over time if the company's performance holds up. If investors wish to retire by 2030, buying Tesla stock is likely the best option available right now. Check out our other videos on our channel for more information about Tesla stocks.